Before you guys even enter into a trade, what's the first thing that you do? You ensure that your trade setup aligns with the daily bias along with your other confluences to ensure that you have a higher probability of winning your trade. So in this video, I'm going to share with you guys concepts about daily bias in trading so that all your trades will be pointed in the right direction from here on out. Today we are going to be going through about daily bias. So when it comes to daily bias, there's two things you need to know: internal and external liquidity. So these two levels are of importance because it shapes how the price action is going to be like for the rest of the week or even on a daily level. Let's talk about internal liquidity over here. So internal liquidity can be things like fair value gap, order block, breaker blocks, etc. etc. I'm not going to list everything, but depending on your trading style, it will be categorized under internal liquidity. As for external liquidity, it can be weekly O highs and lows, daily O highs and lows, and higher time frame hourly O highs and lows. Alright, the important question you guys should be asking is, why do these liquidity levels matter? Right? Because when you are starting price action for the day itself or for the week ahead, the way price reacts off these liquidity levels will determine how you trade for the rest of the week, either seconds, minutes, hourly, daily, whatever. I'm going to give you guys an illustration so it's a bit clearer. Let's say we open the week on the downtrend, right? And this is Monday's opening price. And for the rest of the day, it's just been going down. And now we are on to Tuesday. So this is Monday's price action. So on Tuesday, you want to see whether price would respect this fair value gap over here. So let's say price comes up here, right? Will it respect the fair value gap, or will the price come out to take out the fair value gap and head over higher? Let's say you see price respecting the fair value gap and then go down, and then it's just hanging around this area. So personally for me, if I see price respecting this fair value gap over here, I would enter a short position here because on the daily bias itself, price is on the downward movement and I see my internal liquidity of fair value gap being respected. So just by judging this price action, I will look for shorts instead of going for a long. So within the day itself, I'll be actively looking at the price action, looking for shorts for the day itself because that's my bias, right? And I want to be aligned with my bias. So hence why I'll be looking for shorts. Let me give you guys another example here for external liquidity. Let's say the top over here is the weekly high and the bottom over here is the weekly low. And within the price action itself, let's say that we are on an uptrend. We see price touching the weekly high over here. So the weekly high has been tapped. So from here, I need to know whether the price is going to start a reversal trend over here, or is it going to be a continuation trend? Based on how the price action reacted by touching this weekly high will determine how I trade for the rest of the week or maybe on the day itself. Let's say I see price continuing this uptrend strongly, blasting ahead, doesn't give a fuck about the high time frame PD array. It just keeps going up and up and up. Based on this price action alone, I would not enter a short here just because this is a high time frame P array. Normally it gets respected and price will bounce down, but in this scenario, let's just say that it blasts through. So I'll enter for longs of the market structure within this area because I don't see price respecting this weekly high. So to me, this is a trend continuation. It's not a reversal. So after identifying it as a continuation, my bias aligns with the continuation, so I'll be looking for longs. I'll not be looking for short setups. This is why price actions reaction of all of these liquidity levels, internal or external level, matters a lot because it will determine what your alignment with your trade bias is. Let's take a look at this example here. So now it's Monday, the market just opened, and I see this fair value gap. This was from last week. Because it's a new week, I want to see what price does first. But what I know is that this week over here was the previous weekly low. So I want to see what price action does to this level for me to even determine what my trade direction is going to be for the rest of the week. So let's see what price action does over here for me to react and determine my bias for the week. What I can see from the price action from Monday through Tuesday is that this weekly low might be respected from the previous week. So I might not want to be looking for shorts because this might be at the end of the downtrend, because I can also spot the shift in market structure that is happening over here. So I want to be cautious because my bias is still bearish. I'll not ignore this downtrend from the end of November through the start of December because I still respect the downtrend over here. I need to wait for more confirmation in this level. So let's see what happens over here. Okay, price is still just consolidating. Usually Tuesday and Wednesday can be the high of the week or the low of the week. For me, based on this price action alone, I can see that price is really respecting this weekly low from the previous week, and I want to look for long entries now because I can also see this internal liquidity level being respected as a fair value gap, and there's also order block over here that got respected, right? So all the confluences are pointing to me that this is a shift in market structure and I need to go for longs. I'll enter a trade off the breaker level over here. I'll put my stop loss here and I'll aim for the previous level of liquidity over here, which is a good 3 to 7 risk to reward trade. So let's see what happens over here. That's where I got filled. And that's where I get all these liquidity levels over here taken out. So can you guys see the logic behind how I align my daily bias with my trade? So first I identified my external liquidity, which is this weekly low over here from the previous week on Monday's trading. So I'll be patient and wait and see whether this week's price action is going to respect my external liquidity from the previous week because it's a key level for me. And I see price blowing up, shifting in market structure, but I still don't have confirmation within Tuesday itself that price is going to change its trend from bearish to bullish, right? So I'll be patient and I'll just keep waiting and wait for more confirmations. And within this price action itself, it also provided me with many internal liquidity confirmations that price has been respecting. As you can see from these levels over here, price respects this internal liquidity as well. If I have both my internal and external liquidity being respected purely based on how the prices are reacting off these levels, I have enough confirmation to point to me towards a bullish direction. Hence, I'll be entering longs of all of these confluences that I've gotten based on the price action over here. Let's take a look at another example over here that played out purely just from an external liquidity point of view. It's a Monday, right? It's a new week again. And just from the previous week alone, you can see these key swing highs over here. I want to be patient and see what this week brings to me based on how price reacts off this external liquidity level for me to even determine the trade. Because based on what I'm seeing off of this level is that prices are respecting this level. If prices continue to reject off this level, I will take it as it's a rejection level and it's highly respected. So I'm going to be looking for shorts instead. But obviously the market structure also have to give me enough confirmation that the market structure has shifted, because for now we are in an uptrend, right? We are still in an uptrend. So I need confirmation. This swing point has already been broken, but price came back up again. So I need to see what prices does over here. So from this huge momentum down candle, I can see that this key swing point over here is really being heavily respected by the prices. So if I see a clear break in market structure here, I'm going to go for shorts. This is probably what gives me confirmation that we are going to hit lower. And from here, I can see multiple. There's an order block over here for my entry, and also fair value gaps over here. So I'll get an entry here, somewhere in the mid level, right? And then I'll just aim for all the liquidity down here. Let's see what happens. Okay, I got a few over here. Yep, so this is a complete trade. So every day of the new week, especially on Monday, I'll take a look at what happened on the previous week. I identify all the internal, external liquidity that I need to observe for me to even pick a direction to trade on for this new week. Similar to the previous example just now, it's the same for this example, right? I identified this key swing high point that was created on Wednesday, rejected this level Thursday through Friday, but it came back up again. And when the week opened on a Monday, I can see this huge momentum candle downwards, which gives me signs, right? Price has rejected this level 1, 2, 3, a total of 3 times. So I probably think to myself that it's probably not a good idea to go for a long because price seems to be rejecting this level, respecting this key swing point over here. So after I see price giving me a huge momentum candle down, breaking structure over here. I identified all the internal liquidity over here. And then I see price respecting all of these internal liquidity levels as well, which led me to entering a trade over here. And then that's where my profits cashed. Can you guys understand what I just gone through with you step by step? What I have given you is my thought process going into a new week, what I usually do before I even enter any trades for this new week, what I study, etc. So I want you guys to take notes. This is what you should be doing whenever you enter into a new week of trading. So the important lesson here is to understand what price action does when it reacts off all of these liquidity levels. I'm going to be teaching you guys about institutional bias as well. So this is something that I learned from ICT itself, and I want to make sure that all of you know it as well. So basically, institutional bias is if price action is bullish, buy at or below weekly opening price, vice versa. So let's say if price action is bearish, sell at or above weekly opening price. You get it? Let's take a look at this price action over here. I'm on a weekly time frame right now. The week of this Monday, let's disregard all this price action over here because it hasn't happened yet. When the Monday opens, right, the price opens over here. So I'll mark out this as my weekly opening price. This level is very important because it provides you with the institutional bias on where you are heading towards the week. Okay, so what's the first thing that you do? You check what happened on the previous weeks. So I can see that there's actually this huge daily fair value gap over here that has been respected ever since priced switch structure from a bearish momentum to a bullish market structure. It's been creating higher highs and higher lows over here. So I go on to my hourly time frame because I'm an intraday trader. I trade on a 4, 1 and the 15-minute chart as well. I'm going to mark this in red instead so it's easier for you guys to see so that you don't get confused by all this breaker level. So based on this opening price over here, I usually don't trade on a Monday because there isn't much confirmation yet. So most of my trades are taken either on Tuesday, Wednesday or Thursday after I can get a read on where my bias is headed for the week itself. For this scenario over here, you can see that price respected this weekly opening price, and if I'm going for longs, I want to buy at or below the weekly opening price. This area should be where my bias was from, but it's a Monday, right? So I don't think I would have gotten an entry here either ways. I can see that price still respected this fair value gap over here, which is a pretty huge internal level liquidity. So if it respects this throughout all these days, it gives me enough confirmation that the internal liquidity is going to get respected. So I'll be looking for longs. I can see this bounce over here, which proves to me that, you know what, I think that this is going to be a bullish week. I would have probably entered off this level over here because it's a Tuesday, given me enough confirmation, and given the fact that my moving average is also being respected, gives me more than enough confirmation on Tuesday for me to go for a long. What I can identify is this small value gap. What time is it? London Apex opening is usually either the high of the day or the low of the day. In this scenario, it will be the low of the day, and in fact the low of the week. Let's say that I don't get my entry in here, right? This price action just explodes outwards, right? Another breaker over here. I still have my fair value gap over here where I can enter for longs. Here, entry, and then I put my stop loss at the first candle's low, and I just aim for this level of liquidity over here. This is a 2.64 risk to reward trade. Typically, I aim for my next draw on liquidity level, so obviously I wouldn't have been able to get all of this level. That's about it for this video. I've taught you guys the concepts of how you should frame your trade setups to align with your daily bias, what are the checklists that you have to take before you even enter into a trade, and I've also taught you guys about institutional bias, which may come in handy because if you just add both of these concepts together and you keep applying them throughout the rest of these next few upcoming weeks, I'm sure that you'll master the concept of bias in general and bring your trading to the next level. So to end off this video, these are the key takeaways to mastering daily bias. First, you have to know where your internal and external liquidity levels are. Secondly, you have to understand what the prices do at these levels. Does the trend continue, or is there a reversal that is going to occur at these levels? And lastly, whenever you enter into a new week of trading, always step back, take a look at what happened last week for you to frame your trades for the upcoming week. Trust me, this helps a lot when it comes to finding your daily bias for the rest of the week. That's all for today's video, and I wish you guys all the best in your trading.